Warren Buffett's farm analogy explained. So for this, I'm going to go through the farm analogy, and instead of going through it in one go, I'm going to break it down piece by piece with every section on how this analogy actually relates to the market and how it's actually really great insight for you as a trader in wealth, and the psychology behind it, breaking it down a lot more simply so you can understand the mindset you kind of need to be a trader or an investor as well. So first things first, Warren Buffett says, imagine you're a farmer and you just bought this 160 acres worth of land. Now, these 160 acres, you can equate to them as either shares in a particular company or multiple companies across the New York Stock Exchange. Personally, I feel like he was talking about the particular company having 160 shares in that company, but you could also take it as the New York Stock Exchange, because later on he does say it's better to own a cross section of America than just particular stocks instead. Either way, it's good for both traders. Now imagine you have a neighbor who is also a farmer and he has an identical 160 acres, same soil, same land, same crop layout, everything is exactly the same. Now the only particular difference about this farmer is every single day he will call out a price to either buy your farm or to sell his farm. This being, of course, the 160 acres that he has as well is identical to yours. So whether you choose to go to the route of 160 shares in a company or a little cross section of different companies' shares, and the actual guy being the market. The brokerage that's willing to pay for these shares and to sell you these shares, and in a little bit more detail, the actual theoretical person that's buying these or selling these. He then goes on to explain that when you first bought this farm, you're mostly buying it for the potential. You haven't started harvesting yet, you haven't started producing crops yet. You bought this farm because you know in the future it'll produce you X amount of produce. Same thing going to stocks. When you buy shares in a company, you're not buying at really what they're producing right now, what they're doing right now, but what'll happen in the future by, either getting more patents, more clients, producing more, upscaling, growing, things like that. You're not really buying it for where it's at right now, but where it's going to be. He then reminds you that your neighbor is there to serve you and not to scare you, and that you really don't need to pay attention to the people that are telling you what your neighbor is going to call out the next day. And that a lot of people do that in real life too. They'll pay an expert to say, hey, where do you think this stock is going to open at tomorrow? Or where do you think it's going to close at in a week from now? That a lot of people are just wasting their money by getting more advice than they really don't even need, because they for sure don't know what that neighbor's going to call out. But their prediction is what you're paying for, and more often than not is not even going to be true. So after he lightly touched up on that subject, gave the example on how, what if one day your neighbor came out and was like, I'll give you $2,000 per acre. And you're like, no, it's too little. And the next day he was like, I'll give you $1,500 per acre. You're like, no, it's too little. And the next day he's like, I'll give you $800 per acre. And you start thinking to yourself, wow, like maybe I should sell this, because every single day this person's willing to pay less and less and less for this. But you didn't buy this farm based on what your neighbor was gonna say every single day. You bought this because of what you thought it was gonna produce. Same thing with stocks. I like to call it the shakedown period, where you'll hold a stock and all of a sudden it starts dropping, and there's just a lot of new bad news about it, which in that case you might actually need to change your investment strategy. But if it's just fluff, because remember, news headlines need to have something newsworthy, and you may lose out on a good stock just because you sold it, which will lead to over trading, which will diminish your returns even more so. On how if you just would have bought this land and held it for a really long time, no matter what, you would have produced a good portion of crops with, some bad years, some good years, some mediocre years. And then he then explains that if you just believe in America in general, that no matter what, you'll produce a good return on your investment no matter what. And that the best way to invest is just getting an index fund and just buying it, holding it, and then forgetting about it for the next few decades to come. So I hope you guys liked the video. I thought it was really interesting on how he just basically took it down to just fundamental trading and just buying and holding for a really long time and just believing in the company. And also the psychological aspect behind it too, that there really is a market out there that's going to tell you what your stock is worth, but it might not actually be the value that it's going to be in the future, or might even be undervaluing it now. But the beauty of stocks is that you can buy and sell 5 days a week whenever you want. So thank you guys for watching. Remember to leave a like, comment, and subscribe for more future content.